This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Buddy, thanks for tuning in. This is Mike Mansfield and Tana Pennington, and Tana's always laughing.
I am.
And this is The Wealth Puzzle. So thank you. So, hey, first and foremost, love all of our listeners, love our viewers. Obviously, people listen to this on the podcast. They go to YouTube and they go to Rumble. They watch the videos. It's very exciting. And I've been doing this for years. And this is my first, what is it, a retractment? Is that what you say when when they have to put something in the paper that they aren't totally honest about? I have to make my first retractment here. We had an issue. Last week, I was highly critical of Connor, the tax professional. And the video that we loaded, I blamed him, saying that he was the one that had the crap resolution and ruined my video.
Right.
And what I'm learning is somehow it was still buffering when I was loading it and playing with it. And mysteriously, it's all better. And so he watched the show afterwards and he's like, dude, why'd you throw me under the bus?
I know. He's so mean.
He's like, I just watched the video. It's fine. I'm like, no, it's not. It's garbage.
So
I need
awesome.
3D goggles to watch it. And then I go back to watch it. I'm like, what the heck? It was
so awesome.
It was terrible. So anyways, my fault. I am the first to admit when I am at fault. And so I am at fault. And so there we go. Whew.
Okay.
Anyways, down to business.
Apology accepted.
Thank you. But down to business. We're the Lynn Group. We focus on retirement income planning. We try to bring you guys topics every week that are honestly very current eventy. We talk about current events because guess what? These things impact you. They impact your finances. They impact your goals. And so, I mean, for example, here, let me plop something up on the screen here that I thought was funny. This website is just terrible for anyone who's viewing this. It's got more ads than content on it, but it says something interesting in the orange. I'll highlight it. New bill creates Medicare Part E.
Very interesting.
Boom.
Yes.
So what is this saying, Tana? You're
So
the
this
Medicare pro.
This is coming down the pipe, possibly something that everyone's talking about. So Medicare Part E would be for everyone. Medicare for everyone. Interesting. Yeah. So even for individuals, families, and then also businesses could possibly enroll their employees into Medicare Part E. So
interesting. Obviously, this is a thing. It's pushed by Rep. Don Bayer, Virginia, and someone Gomez of California, and someone Boyle of Pennsylvania. So they've put this thing together. They're trying to push it through. But this is the next level of insanity, right? You know what?
Right.
We can't afford anything.
Right.
If the government was an individual, it's like having, I don't know, $1 million on your credit card. And you're saying, oh my gosh, I just got the announcement that Disney's having cruises out of San Pedro again. And that 5-star dining is awesome. And I have no money.
Everyone.
But hey, it's only $30,000. Do I have any more room on my credit card? So that's kind of what's happening right now is we have so many fascinating things going on in this country that, hey, let's just get a shovel and throw some more right on top because why not? So the concept is very interesting. Health insurance is a fascinating issue.
That will never go away.
It's I don't know. I mean, from a constitutional standpoint, you have no right to health insurance. That sounds weird. I don't mean that in a mean way, but from a constitutional standpoint, that's why there's individual companies that were designed to give people care. And so Big Brother can step in and control everything. But hey, I just thought that this was funny, but it brings up a point. Once again, going back to the theme, current events. The things that impact you are the things that we want to talk about. We have a lot of clients that want to retire at 60, but they're really struggling with that because that Medicare issue, right? From 60 to 65, a lot of individual health insurance, if you make any decent amount of money, is very expensive. A husband and wife who don't get a subsidy are looking at the better part of $1,800, maybe even $2,000 a month.
Right.
Get hammered. So anyways, this is once again kind of a current event, kind of fascinating. All right, Tana, what'd you have for us? I know you sent me an article. It's here somewhere.
Oh, I did. This is just regarding cybersecurity in the wake of, what happened months ago with the Colonial Pipeline and JBS Foods.
Was that months ago? Would that be defined as months? I don't know.
Well,
maybe
I don't know.
A month ago.
Okay.
June?
Well, time is flying for me, so.
Is it? Is that your?
Feels like months ago.
What you got to do is you got to go get on the Wii. Do you still have a Wii? Does anyone have a Wii anymore?
No.
The Wii Sports has this feature, like you play tennis on your TV.
Yeah.
The Wii Sports has this feature where it tests your Wii Sports age, where like it tests how agile you are and stuff.
That
and
is
then it gives you your chronological age. So like I'm 75 years old when I test my age on Wii Sports.
That is so funny. I think people look so hilarious when they're playing the Wii and they're like throwing their arms back and forth with it, acting like they're playing tennis.
Are you looking in people's windows? What?
No. I've just been, a spectator during these Wii game events, and I just think it's pretty funny.
Okay.
Anyways,
I apologize. So
no, it's fine. So I was just reading this article this weekend, and it just brought to my mind just a good reminder for all of us, especially traveling. Traveling's up. People are going places.
Yeah.
Be careful with your cell phones. The number one way for data to get intercepted by hackers is just a lost or stolen phone, especially when traveling. So
and everybody's got one these days.
Yeah, absolutely. So some of the things that they said that is helpful is to back up your iPhone. Also, use a very strong password, which can be, a headache, but it's really, really important in case somebody does.
1, 2, 3 doesn't work anymore?
No, I wouldn't advise doing that. Not strong enough. But then also, you might be tempted to use a hotel Wi-Fi, but that's considered public Wi-Fi. So make sure you're using a virtual private network or VPN.
See, that's interesting because I always use that stuff.
No,
because I'm a cheapskate. I don't have unlimited data. So I'm always I'm always looking for the Wi-Fi.
No. Be careful. You can actually, there's IT service companies that will offer either a hardware a VPN or a software VPN.
I've got a VPN on my phone
that you can subscribe to.
I can turn on.
Yeah.
So not an antivirus. This
so
is not
definitely
an
use that.
But
no,
you can turn it on your phone, and then your phone runs even slower.
But just a good reminder, it might be worth it.
I'm going to turn it on right now. You got me all paranoid.
And then don't text or email secret information like your passwords or just,
or
date of birth or social security number. It can definitely get intercepted.
What if you use Snapchat and then it all disappears after 10 seconds?
I wouldn't recommend that either.
I've never used it. I hear
Me neither.
I hear it's all the rage with the kids.
And then if you are taking a phone call, like a business phone call, and you're, out and about, just be mindful of, you're giving possibly social security numbers, date of birth, address, phone number. Just be careful who's listening. Are you stepping away from a crowd, or are you trying to get stuff done and people are around you that could possibly hear that information?
It's funny. This will sound creepy. So I work out at the gym in the mornings, LA Fitness, for all the local people who like to go to LA Fitness. Hey, you can come visit me.
Yes.
Generally there about 5:30. But sometimes, not sometimes, but probably a third of the time, I listen to I have my headphones in, but I'm not listening to anything. Because sometimes I'm just not in the mood to listen to anything. But I leave them in because I notice that people don't bug me when I'm working out.
Oh, good point.
They think you're busy.
Yes.
But then again, you can kind of hear everybody's talking and bantering, because the problem with the old gym is people like to turn it into too much of a social event. See, I like to go there to work out. So I find that if you have your headphones in, even if you're not listening, less people talk to you.
Yeah. And if it's noise canceling, then maybe you can have a little more peace.
Social of me. I should be nicer. I guess I'll take them out now.
But another few reminders too, as well. If you're, on the internet, just be careful about sharing personal information with people that maybe you don't know. Like maybe you're not realizing if your, kids are gaming on the internet. Make sure they're not making friends with absolute strangers and they're sharing, family secrets or information or address, or that you guys are going out of town in a week. So you got to be careful there. Download updates from app stores rather than just on the external websites and other sources, because you could cause a big problem there. So just some few tips. I thought they were pretty helpful.
Dude, and I don't know what's happening. I feel like I get so many gibberish emails and texts now.
Oh, yes.
And it's so tempted to click on them.
Don't click on them.
Look legitimate too.
Right.
And so what you got to do, like with your email, is you have to click like where it says this is from Amazon, but if you click on it, then it's from Bob's Donkey Shop or something weird. But you got to check the threads of where they're coming from. So, fun fact. I like it. All right. Well, protect yourselves. The other thing too, I guess on a separate note, is we use Crud, what are those things? What are the things
Is it the
called?
RFID card?
There you go.
Yeah.
Whew, you like bailed me out. That was not in my head.
High five.
So that's a COVID high five right there.
Right?
Yeah.
Playing it safe.
Where's my wallet? Here's my wallet. I left it on the table. That was probably not secure. Yeah, all right, I'm pulling out of my wallet. Don't count my money, everybody, while I'm opening my wallet here. Right here in my wallet. So I got an RFID card. If anybody wants one of these things, call the office, 805-500-7035. I've got a couple boxes of them. I buy them occasionally. So what an RFID card does is, I don't really know. It's like Star Wars. That's the way I think of it. Like when the Millennium Falcon has to turn on the force field when they're getting shot at, kind of a deal. So skimmers have the ability to somehow buy this machine like on eBay and walk through Starbucks and somehow suck all the data off your credit card. And so my wallet is like the Millennial Falcon right now, that it has some kind of 8-inch round force field that if anyone tries to skim data off of it, somehow it just is gibberish.
That's a great analogy.
The best I got. It shows my my level of technology abilities. Right. I have to equate things to the movies. So VPNs are good. Strong passwords are good. RFID cards are good. And no matter what you do, your identity seems to get stolen. If you bought something at Target, then you get the letter. I got a letter from CMH, the local hospital. Your data is gone again. So you just got to be careful about it.
Right.
And monitor your information and keep an eye on it.
Yeah. And even if you're a business owner, there's things that you really have to think about too, as well. Like there's vendors that you're doing business with, consultants that you're doing business with, contractors. Make sure you know who they are and how they do business, because that's going to affect your client's data.
Yeah, it's like, that's why I hate going to I don't know. Never mind. Yeah. I'm going to stop there.
Okay.
I sound like Joe Biden. He always does that. Where he's like done with the thought. Well, I'm not even going to say that. All right. Anyways. Moving on. Okay. This is good stuff, everybody, for all of our listeners. So what does this article say? Higher taxes for the rich edge closer as Democrats pass $3.5 trillion budget outline. So it was an incredible week last week, right? We spent over $4.5 trillion, or we're trying to, in our government. Last year, we spent $7 trillion. It looks like we'll probably hit another $7 trillion this year. Like trill is going to be the fancy word that we talk about these days.
Ouch.
Tossing trills around here. It's incredible, right? So we passed this infrastructure bill. It says infrastructure, only like a third of it actually is for infrastructure. I don't know what the rest is for. It's not infrastructure. And then now they're trying to pass this budget, $3.5 trillion budget, but it's very interesting. Some of the stuff in here, as usual, is very interesting. Once again, we talk about these themes because they impact you. They impact your finances. They impact the stock market. They impact economics. All of these things have some kind of impact. And all right, quiz question, Tana. This is a weird quiz question.
Oh, no. Okay. I'm paying attention.
In your situation, it's a weird one. I was going to say, have you ever gotten a job from a poor person?
No.
So would you say that rich people or poor people generally hire?
Rich people.
Yeah, it's a weird one.
I'm still waiting for a hard question.
That was it. It was just it's just kind of like, it was awkward because I'm like, I'm not a rich person.
Oh,
I'm rich with laughter.
You're a great boss.
I'm rich with.
We have a great team.
So, anyways, That was a disaster. Okay, let's get to the point of this article. So, a couple of things that are very interesting about this bill is everything has an impact on everybody, right? The cost of a business. They're talking about corporate tax rates. They're talking about individual tax rates. What was it? What was the initial part though that was so funny in this article where it's like, yeah, there's not a lot of detail. Blah blah blah. The framework was passed on Monday. That outline offers scant detail on specific policy relative to. So that's the irony here, right? Is we can pass a bill that doesn't actually have all the full details. Oh yeah, just do it. Sounds good. Saying that it only seeks tax fairness for high income individuals. Did you know? And don't hold me to the stat. It's close, but something like that. Did you know like the top 10% pay like 70% of our income taxes?
I thought that was very interesting.
Right, something like that. But this seeks fairness for once on those high income people because they don't pay their fair share. Sorry, this is gonna be one of those weird shows where some people just turn it off. Okay, this is what's fun though. Oh my gosh, that was a guess, and here it is. Taxpayers who earn more than $500,000 paid about 70% of the total income. People, I hadn't scrolled down that far. You're watching the show. That was out of a file cabinet in the back of my head. And there it is. Okay.
A file cabinet.
Okay, so here's the first piece of the show. Income taxes. Raising the top marginal tax bracket to 39.6 from 37%. Well, it doesn't sound too bad. Tana, okay, here's another quiz. You said the last one was so easy. This one's gonna be this one's gonna be tough. What is the difference between 39.6 and 37%? If you had to put a number.
2% ish, like 2.6, I think.
That would be exactly correct.
Okay.
You nailed it. Congratulations. Another COVID high five.
High five.
COVID high five. Jeez, too much caffeine. All right, so they're saying those evil rich people, they're going to pay an extra 2.6% on their top dollars. So that's kind of funny, right? So let's scroll down a little further in the article. As a result, the average tax paid by those who earn $500,000, we're going to start with $500,000, would increase to about 31% from 27%. Okay, Tana, what is the difference between 27 and 31%?
3%? No, 4%.
4%, right?
Sorry. Yeah, 4.
Okay, so let's think about this for a second. The top tax bracket's increasing 2.6%, but somehow when they increase it 2.6%, the average person making $500,000 is going to pay an extra 4%.
Yeah. How does that work?
Like what? Like this is government math right now. Like does that make any sense?
No.
Doesn't make any sense, right? Because it's not too bad. 2%, absorb it. But all of a sudden,
it increases
a little more. And so what I had to do is I had to get another article in order to show everybody what's happening here. So I pulled up on taxfoundation.org. I pulled up the tax brackets. Okay. So what we're going to focus on for anybody watching the show is we're going to look at the married individuals, which are the numbers right down the middle of the screen. So what did they just say? They said on the left side, the 37% bracket, if you guys,
we can't see it yet.
No, geez, Tana, why didn't you jump in? I'm like,
I just did.
I had the article going the whole time. And you never told me I wasn't showing anybody.
Oh, I was waiting for the chart.
Okay. Thanks a lot. Oops, what did I just do? I made it too big. Okay, here we go. So middle of the screen, I've got married filed jointly going down the middle. Left side, I've got that 37% bracket at the bottom. So number one, they're saying that they're going to increase the 37% to 39.6. So that's going up. Well, yeah, but that's only on folks that make over $600,000. Oh, by the way, what is not obvious, that is a very subtle thing, is they're completely eliminating the 35% bracket. They're eliminating a good swath of the 32% bracket.
Right.
And they're just calling all of that the 39.6% bracket.
So that's a bigger jump.
Who makes over $400,000, well, that amount of money initially is going to be taxed at about 8% extra.
Right.
That's a pretty stinking big jump. Those dollars are going to have a 25% increase.
Yeah, that's a good point.
party foul. Whoops. The 35% bracket, you're getting basically a 5% increase on that on the, over $200,000 of income. And then if you're one of those lucky folks who makes too much money, well, however you define that, then you're 39.6. So when you actually blend all of that junk together, you end up paying not that 2.6%,
right?
That visual headline they keep talking about. You end up paying an average of probably 4 or 5% more in taxes.
Yeah, that's a very good point.
Whoops. Right? If you let's see, if you make so if you made $1 million, it's going to be almost 33%. So there's some irony here, right? And that is everything is not always as easy as it appears. Everybody likes to run off the headline of the newspaper and say, "Oh, taxes are going up." Yeah, but they're only going up 2.6%. Well, that's not really true. I mean, if you're making $450,000, so you're well below that 37% bracket, you're actually getting a much bigger increase. You're getting somewhere between you're probably getting like a 6% increase.
Right.
It's crazy. It's not crazy, but it is what it is. So just wanted to point that out, that sometimes numbers aren't what they seem. I don't know. What are we trying to point out there?
Well, they simplify something when really there's a lot more detail that we don't know about.
Yeah. It seems like no big deal. It's just a little bit on those top dollars. Well, no, but they're actually blowing out a couple tax brackets, completely replacing them with this higher bracket, totally hammering the people that make that amount of money. Oh, by the way, which are generally the people in society that hire you, not you, but you. Like, how do you like? Y'all.
That's how we say it in Texas.
Y'all.
Yeah.
So anyways, another fun fact that they want to do is they want to raise the capital gains rate. So anybody who actually does well selling a piece of real estate, selling a stock, how dare you? Number one, right? So the top tax bracket right now, if you are a big breadwinner, so most people don't even hit this, is 23.8% federally. Top long-term capital gain. You see what the new one's going to be in parentheses? I can't highlight
43.4%.
Yeah. Almost 44% will be the new. They're basically doubling the top capital gains rate. So if you sell a house federally, an investment property, and you do well on it, the feds are going to take almost 44% of it. Let's round up. Almost half of it gains will go to the feds. Oh, guess what? If you want to live in California, California has its own state tax too, friends. So you hit the max tax bracket there. There's another 13, 14-ish%.
Ouch.
Well, hot dog, that's very patriotic of you to give almost 60% of your investment gain to the government. But you know what? You did really well. So why shouldn't you? Anyways, there's a lot of, I don't know. Is that facetious? I don't know. Like,
it's not happy.
Yeah. Well, remember, because I'm not being mean. It's like, To me, I like economy. I like people having resources. There is not a infinite amount of money in the U.S. There is a finite amount of money, and that is the problem. Is if you take too much money from people to grow the government, it impedes economy. Japan was a perfect example of this. Japan was an economic superpower in the 80s. And then they only spent 70% of their GDP on the government. And by the late 90s, they were spending 40+%. And guess what? Their economy went in the tank. And that's exactly what we're doing right now.
Yeah,
we're massively expanding the government. Massively. But the more you expand it, the more money you need. Here's how we're going to get money. We're going to take from the rich people. Oh, guess what? The rich people are the ones that hire everybody.
Yeah.
So you stifle innovation. You stifle growth. You stifle job creation. I'm getting fired up.
Heated.
All right. Let's just take a
rightfully so
3 seconds of silence. Okay, I'm back. Anyways.
Oh, have you ever watched Dude Perfect?
Dude Perfect?
Dude Perfect. It's
Is
a group of
Texas
guys.
Thing?
No,
sounds like
a group of guys that they started this YouTube video and they were just doing these trick shots, and then it turned into something even bigger. But the one thing that they do in some of their episodes is one of the main guys does a rage monster
Rage monster.
Yeah, so he all of a sudden turns into like Rage Monster, and it's actually pretty funny. I thought you were getting kind of close to that just now.
Rage monstering. I don't watch YouTube videos. I don't like YouTube.
Well, I have boys.
But keep watching our YouTube videos, everybody.
Oh, it's awesome.
YouTube. I got my laundry list of companies I don't like. For different reasons. All right. Anyways, we'll move on from that. The other one, though. Now, remember what the rhetoric here is with these bills is we're not going to tax anybody who makes less than $400,000. Oh, just kidding. Okay, there's my rage monster coming out. Tana got me on the rage monster. Just kidding. Haha. So, a couple things that they're trying to get rid of is they want to get rid of stepped-up basis. Stepped-up basis is your mom dies, leaves you her house, you get it free and clear tax-free as a piddly pathetic way for you to attempt to maintain some kind of sad existence in the middle class. They want to get rid of that. They want to make those assets taxable on people's death. Here it is. How appreciated assets held by are passed there is, for example, capital gains taxed at death. Let me say what that means. Normally, you have a capital gain when you sell something. So if mom dies and leaves you her house, number one, and at the moment it's tax-free. But number two, if you then sold it, that would be the taxable event, right? You sold the house. You've disposed of it. So therefore, now you got to consider any tax liability. They want to do it at death and say, hey, whether you sell the house or not, hot diggity dog, the house is taxable. Figure out how you want to pay the tax bill, kids.
That's going to be really tough.
Loan against the house. Do you have to sell it? One way or another, we want our tax money. I find that super mean, super insane. And guess what? This is going to impact all of the people that are under the 400,000. This is a rule for everybody. So it is not a pure thought that there's not taxation for people making under 400,000. I mean, hell, you want to get into that? Let's talk about how inflation is a passive tax on low income people.
Yeah, good point.
Sorry. Anyways, we're like running out of time here, so I've kind of started to transition to the highlight reel here. So currently, an asset's appreciation isn't taxed upon the owner's death. Oh, but they want to make it. That's cute. The asset gets stepped up basis. So we just mentioned that, meaning it transfers at current market value, erasing the capital gains. So the heirs could sell these things tax free. So they want to get rid of that. They want to make these assets taxable. They want to make the taxable event mom's death, not selling the house kind of a thing.
Right.
So, anyways. What else do we got? Tax enforcement. So this is another funny one. The Democrats are also eyeing tax compliance. So basically, they want to go audit the heck out of everybody to try to find more tax revenue to pay for all their bills. Now, I would make an argument that most high-income people, knock on wood, most high-income people actually are relatively honest about their taxes. Now, it doesn't mean that they're not doing creative things because they're wealthy and they have good CPAs and they've got accounts and they've got businesses and corporations. But from an honesty standpoint, all they're doing is maximizing the ridiculously thick IRS tax code to their full benefit. So they're not, I don't think most people are doing anything majorly illegal. It's just that there's a lot of creative ways to practice tax avoidance. So they're going to try to audit everybody to try to find all of that stuff. You see here, like, partnerships, proprietorships, rental properties, all the rich people have this stuff, and we're going to make sure they're doing it right. And so they're going to spend a ton of money, auditing these people to try to find more money. And I'm going to say right now, I bet you $5, Tana. Should we shake on it?
Yeah.
COVID shake. I'm going to bet you $5 that they don't find nearly as much as they're looking for. Honestly, where most of the tax cheating happens in society is on the low-level incomes, right? It's people not reporting having a garage sale and a lemonade stand and paying people to work in the back of your shop. Sweeping. Yeah.
Good point.
That's where a lot of the true tax fraud happens and tax, not being paid. So anyways, that's all I got. What do you take it away?
No, I think it was good. We got a lot accomplished.
I know. I spoke too much. I apologize. I was just excited.
Oh, that's good.
I love new laws. It gives me something to focus on. I gotta focus my energy. Anyways, hey, here, let's pop a banner on here. If anybody has any questions, thoughts, concerns about how these things impact their own retirement, their own finances, their own goals, give us a call, 805-500-7035. Visit our main website, thelindgroup.com. Lind is Lynd. But that's why we're here. This is what we do. This is how we help people. So as always, Tana, I appreciate you being here.
Thank you.
Everyone have a great day.